Good morning, guys. This is Simon with Trade and Perform Coaching doing the market preview for the 21st of June. Okay, so let's jump in. First, let's get the non-fun stuff out of the way. Legal notice, important disclaimer, and reminder for all traders and investors. The webinar is for educational purposes only and not a recommendation to buy or sell any particular financial instrument. Equities, futures, and currency trading have large potential rewards, but also large potential risks. You must be aware of the risks and be willing to accept them in order to invest in the futures and options markets. Absolutely do not trade with money you can't afford to lose. The website is neither a solicitation nor an offer to buy or sell equities, futures, or options. No representation is being made that any account will or is likely to achieve profits or losses similar to those discussed in this channel. Past performance of any trading system or methodology is not necessarily indicative of future results. Absolutely consult your registered financial advisor and your risk trading plan before ever investing or trading any financial instrument. Let's get Globex high and low in. So we're at 38.50. We're coming up on that 24.40.50. Definitely think that there is a resistance area there, and I will be looking actually to fade that this morning. It's an aggressive setup, so make sure that fits your trade plan, but I will be looking to fade this 40.50 to 42.55, particularly if I can get right to 41 and like 24.41 and a quarter, 21.44, 41.50. That's where I'm zoning in on. Okay, so let's look at Globex low. Came in at 28.75, pretty much perfect. I'm trying to figure out how I can get these trades into my account in the overnight session. This is a great example, by the way, of how, and I'll contrast that in just a minute, why I front run the naked volume points of control is because you miss them a lot of times. That's why my plan yesterday. So I want to just compare that really quick so we can see that, right? See how we landed 3 ticks in front was the low, right? And yesterday we came right to it. I'm willing to take the heat from the on the naked volume points of control. I'm just willing to take risks there. Okay, it just made sense that we would get responsive buying. We got it overnight. For those guys who are able to trade European session, these areas work fantastic in the overnight and much more reliable than they do actually in the U.S. session. I'd say the win rate's closer to 95% of the time. Those key locations give great rotations, better than the U.S. session. The extensions aren't always necessarily as good as this, but in this case, we're up 10 off the low, right? So it's pretty good. So let's talk about key areas today. Let's get NQ in real quick first, and then we'll jump to that. Excuse me. $57.47 and a quarter, 57 for right below again. I think that's going to be a key area. That's close enough for hand grenades right now. My guess is we're going to push right into the white zone there as well. Okay. And then overnight, $56.99. I missed that by a hair. Again, the overnight's going to be a little bit more Globex low. Okay, so you can see we still were pretty mechanical. So for today, it's important to remember 2 things. First of all, number 1, let's go through the checklist, right? The overnight range, so let's just go straight through and we have time to do it. It's easy. 28.75 to 38.50, 10 points. That's an expansion from prior day's range. Okay, number 2, again, going straight down this checklist. If anyone needs it and doesn't have it, just shoot me an email, I'll send you a copy. So we're opening above, below, or inside prior day's range. We're opening inside prior day's range. We tested below overnight, which now makes that 24.34 a key area, right? To trap, if the bears can't get below 24.34, they're trapped, and they're going to bounce between that 40 and 34. Above and holding above 42 That's a push to the upside, right? So then that would open us up for a push and a retest of this next key area, which is 46 3/4 to 47.50. Okay, is market trading out of London, trend up. Oh, it's market trending out of London. I misread my own notes. There we go. I'd say we're actually not particularly trending, but well, let's go look. Maybe I'm wrong about that. I take it back. We're trending. Okay, so on your 24-hour, right, just be aware if you're going to fade that 40 area, right, you're going to have to break this down trying to get a test to the downside. You can see we clearly have broken the overnight downtrend, backside tested it. We're pushing. And then when you look at structure over to the left, right, even if you didn't have the volume profiles and the TPOs, you can already see here that this area starting at 40, right, up to that 42.50, they tried to hold support there, tried to get back above, fell below, pushed underneath, backside tested, came underneath, backside tested, rolled down, pushed back up. And so we're just coming back to a key level, and that was also a key breakout level to the upside, right? So this essentially, that 40 to 42 underneath here traps us back underneath. I hope everyone can see that, right? If we crunch it up a little bit more or go to a larger time frame. Okay, see how that 40 to 42 has been a key area, particularly in the RTH. See that 1, 2. So I would expect a push into this area to garner a rejection. On the other hand, if we open drive higher and bust right to 45, this is going to provide a support zone. So that opening print is going to become pretty important, right? Where did we go overnight? If you look from the swing low, the swing low that launched it, right? So there's a couple ways to look at swing lows. Last swing low, the true swing low, which was back over here, right, to swing high. From a 24-hour perspective, we just came in, essentially we came into one variant of a 50-60 or another. And again, when I do the 50-60s, I draw them on multiple time frames and from multiple swing lows to get an idea. Because what I want to do is see where they're clustered, right? So I can see that some traders were obviously trying to make this work as a retrace, and then obviously the strongest response came from that 24.30 location. 24.28 for a push back up. So we are trending, right? But we're not trending above a key resistance level, and I am looking to fade into this key resistance level this morning. Again, if it hits in the first 30 minutes, yes, it's very aggressive, and I also expect it to make, in order to make any significant move, my thought process is it'll take an hour, right? Even on the open, we're likely to chop around in there, okay? But unless we make an impulse move above, right, like this, and then we hold the backside test. So think about what has to happen in order to break out here is we have to make an impulse move above, right? So the risk there is to just go straight up and never test. But what we want to see is this, then come back to test and hold, and then make a push. That's when we'll know we're probably going to have a break to the upside. So that's what that model, in an ideal scenario, that's what we get when we're in here. Now, whether that pans out or not, that's a different story. But this is what I would like to see happen, and I'm willing to take the risk in here to fade a short. Again, when you look at your trade plan, so I want to pause for a second, right? Most guys have a hard time flipping from long to short, long to short. I'm pretty sure when we get back into this 30 to 28 area, we will find responsive buyers again. And the majority of the time, I know we closed near the low yesterday, but the majority of the time, ES is going to make a U-turn, okay? And you can see it again and again and again and again and again. It does it all the time. It is the basic nature. This pattern right here, this is the basic nature of ES. It does it on 24-hour time frames. It does it on RTH time frames. I would not get excited that we closed near the low, because you can look look at all the structure we have below us, right? So does it look weak, and could it break down? Well, if I was a fundamental analyst, I might be able to make that assessment, but I'm not. I'm a technical trader, and I know this. We've got huge support through here. This is a breakout of this area down here, and they're going to have to work through this and hold below all of this. So visualize, right? Visualize two armies fighting, right? You've got a weak army, the bears, and they're going to come in and push down against this is their line of defense, right? They're going to push against that line of defense. Now, they may break it, right? But A, they're probably not going to break it on the first run. B, all these guys that bought in here and absorbed all this selling, yeah, I know I'm drawing scribbly lines, right? But I want to really make the point. Everyone that bought in here is going to make an attempt to defend. They are not going to give this up easily, right? This is a lot of effort to hold this area, right? So even if they penetrate into that line, it's likely to get constant U-turns. You need to picture that, and then we know what the clues we're looking for within here. Tick divergence, negative 600 to negative 1,000 ticks. Attempts to push at lows, a low, an attempt to break that low, and a snap back in. And people are going to be cognizant this is all support, so when you get those snaps below that they fail to push and break, you know the shorts are going to have to cover. They're going to realize they're at the bottom, that they're in a support area. They're going to be pressed to cover. And then secondly, go look at how rare it is to get two closes at the low, back to back, or anywhere near the low in ES. So, for today, what are we looking for? We know that we've got we're knocking on resistance out of the gate, right? We know we got some strength overnight and we're trending up, which makes that short, aggressive short, but I'm still attacking that. I'm still going to attack that white zone, right? Let's erase all my beautiful drawing. Okay, so next, if we do trend down, right, high odds trade. We break the last swing high, come back in for a 50-60 retrace, push back up, okay? We're looking for at the lows, 5-minute tick divergence, right? Both local and actual true divergence, meaning we come make a low, we swing up, 30 minutes later we make a new low on tick divergence and push back up. That's the best, but sometimes the tick divergence just kind of works like this, where we get one little more push down, then it comes back up. That's localized tick divergence. It's fine in this market, particularly considering where we are in the range. That should still garner a strong response. We're hunting that down. And finally, negative 600 ticks prior to the last hour have been generating nice contra moves, right? The next question we want to ask on this checklist as we're going through, are there any Fed speakers on tap, or is there anything in the way? Let me go do that real quick. Factory. And we have from the lovely people at Forex Factory, 9 a.m. existing home sales. Crude oil inventories at 9:30. Again, oil guys, trade at your own risk on inventory days. Red flag conditions. New Zealand dollar. That's it. There's nothing else more. There's nothing else on the table that I see here. If someone else has something, let me know. Okay, so now let's go take a look at what we look like from another perspective. Well, I'm not used to running this far ahead on time. That's great. So we'll get rid of this beautiful drawing. We'll go over to our TPO. Okay, on our TPO, value shifted lower. This is ES.D. Okay, in order to push up, we're going to have to get above value in this 42 to 44 area and consolidate above. And this 48 area is still resistance. Okay, so I want to be clear about that. Okay, resistance area, okay? In general, I'm not going through and drawing a detailed area, right? If you look overnight, where did we come into? We ran just in front of this support, came to the top of the value area. Okay, so there was value below that was untested. We tested it overnight. Hopefully we get another chance to retest it in the RTH. In order to break down, we have to get underneath 24.24 and hold underneath. If you look to the left, right, if we get underneath 24.24, okay, so there's a double bottom here, okay, which the market will probably cite for a reason for support because it's just a huge stretch at that point, right? That we be one tick below that low, that 24.16 area, right? There's a untested low at 24.12. There's a point of control between 24.12 and 24.10. Again, I don't think we're going to reach any of these. This is 27 points down. I don't think we have the energy in the summertime without news to get there. I don't think home sales are suffering, going to cause any damage there, right? So if we test the lows, I want to be a responsive buyer down in this area for a push back up. If we consolidate above the 44, I'm going to expect a push into 47 where we run into another resistance area. If we can somehow get above 50 and hold, which again, 37 brings up 47, right, which brings up 15, would push us to 50. 47 would bring up 15, push us to about 52, right, which would put us about right here. That'd be about 15 up, right, and that would probably gas us if we could even get that high, right? We got considerable interference on the way up. And when we look at it from a 24-hour perspective, okay, so from a 24-hour perspective, you can see that we actually, this is the hurdle. Okay, so if you fade the 40, you're going to run into support at 34, which is also yesterday's low. From an overnight perspective, they're going to have to grind through this area. Okay, so we're shifting gears here a little bit. Okay, so in this 34, let's just call it just like this, right? That 35 to 33. I would expect that's your overnight support area. You can see how much time it's spent there. So from 40, right, back to 33. Hold on a second here. I'll cover that later with you, Brian, if you'll bring it up. I don't want to go into it right now. And John, I just saw your message. You're very welcome. Okay, so again, I expect rejection from 40. They should run into trouble here at this 34.33. Then if we get underneath that 34.33, that 26 area. So I want to be clear, right? If you look at this, 40, back to 35, 34, maybe 33, a little test underneath yesterday's low and a trap, right? Then we end up in a ping pong situation here as we just balance between these two. If we get underneath Tuesday's low and hold, brings us up for a test. And at particularly 24.27.75 to 24.27.25, I am willing to take a loss in this area. That's my trade plan, right? Next area, I'm willing to take a loss. Notice the key words here: 24.21 to 24.19.75. Okay. Finally, a retest of 24.16 needs help there. That low has been tested numerous times, and I'm definitely willing to take a loss at 24.12 to 24.10. I wanted to note how I said that. I could have said in the affirmative. I'm looking for responsive buyers at each of these locations, okay? And the reason why I say is I'm willing to take a loss is I'm not scared at that area. If I take those trades in those locations 100 times, right, I know I'm going to end up, or very likely to end up, I don't know for a fact, but I'm very likely to end up with a high win rate and a very high profit margin, right? If I, again, key area, and then above that 24.46, these are all the areas. Almost all these are key areas, right? The only one that's not a key area right now, and it is now overnight because we reconstructed it, is that 35 to 33 area. I would adjust this slightly or just make a note. 35 to 33 is the key location. In here, there's an open gap at 31.50. Note that overnight we pushed past it. Note the note. Nothing to help the gap here, guys. That means there's no volume there to help us out to get the contra, right? Volume gets defended, time gets defended. We don't have either one at that location, which is why we pushed past it overnight and came down to where there was volume and got the responsive buyers, okay? On NQ, covering it really quick, really critical, right? When we looked at that big picture, I covered this in the video yesterday. I'm going to go back to it time frame wise, okay? This looked like a potential double top. You got to counter that against, if you saw the trade review that I did last night, NQ constantly V-shapes. There's not been one example in the past 2 years where within 30 days of making a high and then getting squashed, we have not come back up and exceeded that high. 30 days, right? So This is not that many days ago, so you could argue we have more downside, but I want to be clear, even though I am planning to take a short today, make sure it's in your trade plan. I do get intoxicated by shorts because they move fast, it's fun. I don't know why shorts are more fun, there's a psychological reason behind it, but I will only try it once, and then I need additional evidence. And then we're going to use all the other tools that we have. Tick push without exceeding a new high, tick push without exceeding a new low. I'd be cautious on the second test of zones to the downside until we get stretched beyond 10 points, right? And even then, 10 to 15, we're looking for a reason why that second test down is going to hold. But prior to that, I would look for a reason why. You can see that clearly here NQ was defended yesterday against pushing higher, and I would expect the same response into that 49 to 60 area on NQ. And just realize you need a 10-point stop right now on NQ to make your trades work, at least $200 a contract. If you can't afford it, it moves too fast, it's too jumpy or too uncomfortable, don't trade it. A lot of people have a hard time trading NQ. No damage was done to NQ, okay? We've pushed up, we've just rejected out of a double top, but there's no rule that says it cannot come right back up to Tuesday's high, okay? Particularly with the gap that we're getting, not the gap, but the trend up out of London. I don't think I have anything other to share significantly. Is everyone clear on what the trade plan is? I'm going to just pull up the NQ chart real quick. Okay, this overnight, this is where value was yesterday, that 58 to 51, 60 level. If we get above, there's not much holding us back now. Value shifted down. If we get above value, it'd be easy to push and start to explore this unauctioned area over here to the left. Okay, so holding below value or within value, which I expect rejection the first time, right? Then I would expect an auction back in, and you can see where Globex low landed. Was right into the top of value. Here's 5,700. Okay, a little bit higher. So we didn't get into, they used the bottom of these single prints, but it was overnight. Everything works first time overnight, usually. So this is the area, 92 to 62, if I'm going to look to buy. This is where I want to try to swing it out of. Until we're holding above and clearly above here, I would either be looking to fade or step away from NQ, one of the two. Anyways, we're about to open. Does anyone have any questions about the trade plan? Are we clear? Oops. Let me insert tick. Just stay relaxed, stay on process. I had some other stuff I wanted to address, but I want to watch this open here and see if I can get it quick. Didn't want that. Format, symbol, tick, remove, close, insert symbol, tick, plot. Again, the push up into 24, 40, 50, I'm looking for responsive sellers the first time in there, even out of the open. Okay, so just keep that in mind. And again, don't be surprised by a challenging NQ getting rejected out of here, but you got to give it room, right? And Globex high came in at 47.75 and 38.50 on ES. So make those adjustments, please. Why don't I have Globex high on this chart? Let's get 5 minutes here and we'll find out. I have Globex low. I don't have Globex high in here. Okay, Globex high came in at 38.50. I don't know why it's not on the chart, but I will correct that. Oh, well, there we go. So 38.50 is indeed where it landed. And again, this is the area I'm looking to look for responsive sellers out of these two areas. I don't know that we'll get there, but that's what I'm looking for, right? I'm not looking to test Tuesday's low right out of the gate. And let's get the opening print. That looks like it was right here. Right into the white zone on NQ. Again, the highest risk is in that open drive area, right? That puts us up 16 on NQ. And it has to get below the opening print in order to be bearish. Again, that's a gap within range on NQ, so not overly bullish. Could always work itself out so that it is, but you can see how it's pausing right into that white zone, right? That makes perfect sense. Okay, it's totally logical that it would do there. So the logical thing is attempt half gap, gap fill, potentially. And again, it doesn't have to. This is the most dangerous period of the day to take a trade, right? Because you don't know what OTF is going to do. But you can see how that white zone has held that area, right? And it's not uncommon for it to overshoot it even a little bit. Again, the key there will be if it gets underneath that opening print. Will be very important. And again, you can see how that white zone has held that area. So guys, I'll be right back. Give me just 1 second. Run down to the washroom. Again, this was the area I was looking to fade out of on ES. We didn't get there. And I didn't see the comments section, so I apologize about that. I'm looking at that 40.50 to 42.50 area. If we could get up in there, and what was I going to say about that? What I was going to say about that is that's a very aggressive trade, Peter. I prefer the longs to the shorts always in ES. And also the first 30 minutes is the most aggressive area where consistently I have the lowest win rate. Right, so all that in mind, yes, I am looking to be a responsive seller in that 40.50 to 42.50 first time in. Same thing with NQ out of the white zone. Those white zones are really critical. This is a backside test of the opening print on NQ. I expect an attempt at gap fill on NQ. So anyways, I'll be back in just a moment, guys. NQ blasting. Watch out. Again, the same risk on the white zone here is the same risk as the white zone on NQ, right? The possibility of a drive higher, right? Open drive higher always exists. And an overshoot of the white zone in particular in NQ exists. Just like that. We got to retest the Tuesday's low on ES. So again, that's the difference in the nature between a thinly traded instrument and a non-thinly traded instrument is the overshoot possibility. So keep that in mind. And again, the opening prints are important, right? See how we're above the opening print on NQ and below the opening print on ES. Contrasting, I don't know why NQ is driving like it is, but it doesn't matter. The fact of the matter is one's over the opening print, one's under the opening print, and the markets are not following one another at this moment. Backside test the Globex high for NQ. And I can stop this recording. I'll post up the